And we are live. Greetings, everybody. Good evening. Happy Tuesday. Last week we were with you on Wednesday, which was kind of unusual for Goal Getter Live. We've traditionally been on a Tuesday. Oh, there, the phone is going off. Yes, that's the notification. If you subscribe to us on our YouTube channel and you click the bell button to be notified, you will get a little ding to say, yes, we're live. So my ding just went off and we are live. Hi, everybody. I'm Carrie Ann Stimpson. I am the Group Chief Marketing Officer of JMMB and very, very happy to host another JMMB Goal Getter Live with you. I mean, wow, in the midst of everything that has been going on, guys, we remain committed and resolute to the fact that we're going to stay on course. We still all have our financial goals that we want to achieve. Yes, the last year and change has just been something like we never ever dreamed of. But JMMB definitely continues to stand with every Jamaican going through this pandemic, as we all are and have been impacted by it in one way or the other. And as your financial partner, we just continue to just stick by you and stand for the greatness that we know is in everybody, because we all want to achieve our financial goals and dreams for ourselves and our families. And consistent with who we are and how we were founded, we're still here and we're still happy to partner with you. So thank you very much for joining us. You know how we like to do it, people. Call, text, ding, ping, DM, anything. Tell them to come and join, because we're having another awesome conversation tonight. And see my people, them coming in already in the comments. Love it. Richardo, what's happening? Say all initials CM, whatever that means. Hey, happy to see you. Yes, you're here. Tell us where you're watching us from, everybody. Richardo, hey, Keisha, Kadia, Nordia, Karina, Nicole. Brilliant. Love it. Brilliant. Welcome. Hi, Steph. Tell us where you're watching us from, guys. We love it. We know that we not only have a Jamaican contingent, but we have an international contingent as well. So tell us. Hey, what's up, Bill? What's happening, Gian, Kayla? Love it, guys. I don't know if you tuned in last week for the live. If you did make the live, I hope that you caught the replay, because it was a fantastic session last week where we basically, as it turned out, started talking about investing in stocks. So we got into the A, B, C's, you know what I mean? And in the ABCs of it, we spoke about stocks and what they were, the difference between ordinary shares and preference shares and IPO and APO, and how we can invest in stocks, etc. And it was just a fantastic discussion. And as we said, guys, we're flipping the script with Goal Getter Live right now, in the sense that we are going to really be spending most of our time opening up the floor for you guys to ask your questions about stocks. And so we started off last week, and the big question that a lot of people had was, how do I know which stock to buy? You know what I'm saying? So you have lots of stocks. We spoke last week, about how you can begin to choose stocks, the need to educate yourself, how to read a financial statement, and so on. And we just kind of touched the tip of the iceberg. And as Greg, our guest last week, had said, that could be a whole other episode for itself. And so that's exactly what we decided to do. Create a whole other episode to talk about how do you choose stocks. And we know that we don't only have a local stock market here in Jamaica, but there's stock markets in other countries. There are stock markets. There's a stock exchange in Trinidad and Tobago where we also have operations, and we have New York Stock Exchange, and so on and so forth. So guys, the opportunities are everywhere, and we're very excited to have this conversation. So I'm very happy to see everybody in. Janice, Orville, Stacy Ann, what's happening? Love it. And CM, I did big you up. Come on. I said C.M. That's the acronym. I'm not getting the name. So tell me what your name is. I'd love to know what your name is, but I did say CM. Happy to see you guys. Shanique, what's happening? And Empress, love it. So guys, we're going to jump right into it. So here's the format, just like last week. We're going to spend about the first 20 minutes or so, 20 to 30 minutes, just kind of dealing with some level set questions. Going to deal with some of the basics again, just as a quick recap for those of you who will be joining us for the first time this week or didn't catch everything last week. And then we're going to open up the floor for a good long session of Q&A. So guys, I know again, not a lot of us have the opportunity to speak to the kind of experts that we're going to be speaking to tonight, and awesome JMMB team members. So this is your opportunity to get your questions ready so that when we open up the floor, we can start fielding as many questions as possible. All right. So without further ado, let's kick off. And then, yes, hold on to your questions until later on. So we're going to kick off with introducing our awesome guests. And of course, as usual, with all these long titles, I don't like to get myself in trouble, right? So I'll let him tell you what he does. But please bring him up. His name is Peter Thompson. Peter, what's happening?
Hi, Carrie.
What's going on? Hey, I didn't know that you were a Tim Grinner.
Oh, Lord.
I didn't know you were a Tim.
I was trying to, keep it this way because I'm hiding out in my dungeon, so no one has seen this. So,
welcome to the club.
This is exclusive and live.
Yeah, man, this is a grand reveal. Don't worry about it. See, you're in good company. Don't worry about it. It's an awesome step. And yeah, welcome. So, Peter, what do you do at JMMB?
All right, then. Welcome everybody. I think it's almost 1 year now since I've seen you guys. I think last year this time was my first live. So I'm Peter Thompson, and my title, wait for it, Group Client Investment Manager, right? So the essence of it is that JMMB has its own capital that it manages. That's its own money. We have an entire group of people dedicated to that. We also now have, since the whole advent of stocks and bonds, and we're getting more into that. My role is basically to oversee the management of all client portfolios. Meaning, so once you're invested in any one of the unit trusts, any pension fund that JMMB manages, or you have clients coming in and just wanting advice, you want to save for your child's education, and as such you graduate. There's a team of us. I oversee the team that manages that. I also oversee the efforts of the same things in Trinidad, and I'm a role also in the DR. So Group Client Investment Manager. So I oversee all client money. So once it's client's money, somewhere, shape, or form, I'm involved in that.
Awesome. So, and yes, Peter is the expert. So anytime he drops by to say hi to the marketing department, that was the days when we used to work in office before the pandemic, we would hold down Peter and say, come Peter, give us the goods, give us what's new, what's best, what's juicy in the investment scene. So we know we have one of the right people in the conversation tonight. All right. So Peter, before we ask the first question, again, I continue to big up all my people in the comments. Gary, Dermot, Karina, yes, CM, I see that you're at work, and yes, Tingrina, you can certainly use it. Hey, Ashley, thank you. Yes, please, guys, don't ask us any personal questions regarding your accounts in the comments. Please, this is the interweb. We don't want nobody in your private business. Please DM us your specific account concern. Serious thing in these times. All right, and yes, Kenny, Kenny, I see you. I see a question. Don't worry, we soon get in there. Hey, Hayden, welcome, Marvin, Trisha, love it, love it, love it. So, guys, we are ready. We're ready. So, Peter, let's just level set real quick, and we like to just recalibrate. Tell us what is a stock for all of us who need it, totally clear and crystal.
All right, then, breaking it down quite simple. A stock is an investment, a security that represents a part ownership in a company. So if you think about it, a company needs a way to divide up all the people or the interests that all persons have in the company. So for example, Grace Kennedy, in its formation, Grace Kennedy has 995 million shares, ordinary shares. So ordinary shares and common shares, equity, all the same thing. Stock is all the same thing. This is the thing that it's traded on the Jamaica Stock Exchange day in, day out. So a share represents part ownership of the company. So if you buy, so for example, 1,000 shares of Grace Kennedy, you are a 0.01% shareholder in the company, and as such, you're entitled to 0.01% of the company's profit, dividends that are paid out each period.
All right. So you're basically a part owner of a company, which is awesome, because not a lot of us can start our own business or benefit from the benefits of what I call entrepreneurship, owning your own business. But by owning shares in a company, you get the opportunity to do that. And I mean, the question is, who can buy stocks? I guess that's another logical question, because when people hear that, they say, oh, well, the rich people think that I can't own, little old me can't own shares in big Grace Kennedy. I mean, what's up with that, Peter? Is that true?
If only. So really and truly, once upon a time, this whole secret about the stock market and the accessibility of it, one could argue that way back in the day, as my daughter would say, in the olden days, you had to have a large amount of money to be buying a stock. But what has happened with the advent of more brokers coming into the market, we're seeing more retail investors participating. So once you're an adult, you can actually open an account, actually buy stocks. So 18 years and older, you can buy stocks. So who should buy stock is another story, and how much of it is totally a different thing. But the ability to buy, or legally, anybody can actually buy stocks. And the Jamaica Stock Exchange and the industry as a whole has been trying to promote more participation, because you're right, Kerry, when you buy a stock, you are actually buying a piece of somebody else's company. So you are a part owner, right? With little bit of money.
Absolutely. And just to jump real quickly, Peter, because you mentioned broker, because I guess that's another question too. So you said anybody over the age of 18 and up can buy shares in a publicly listed company. And you speak about broker because people sometimes wonder, well, how do I buy stocks? I mean, do I go down to the Jamaica Stock Exchange downtown and ring the bell? And ask for Mrs. Street Forest? I mean, this thing called brokers. What is a broker, and how do I choose or find a broker?
All right. So a broker is an entity, a registered legal entity that is licensed to actually participate, be the middleman, for argument's sake, between buyers and sellers. So you will have a buyer, someone who owns the stock and looking to sell. They will try to sell it through a broker. Someone looking to buy will also be trying to will go through the broker. So the broker acts as this legal entity, this middleman, because without them, what you would need, you would actually have to try and search and find someone who is looking to sell to actually try and do a trade. The broker acts as that party, that person that will find the buyer, try to put buyers and sellers together. Now, with the advent of technology, that becomes extremely easier, because now your broker doesn't have to be a physical person sitting on matching trades. It can be a computer algorithm, it can be online. But the essence of it is that you're not directly selling to the person who is buying. You're doing it through an intermediary.
Awesome. So and that's great to know, guys, because I mean, there are several brokers who are licensed, as it were, to trade, act as that intermediary between buyers and sellers of stocks or shares, those who want to buy, those who want to sell. And it's really up to you to choose a broker that you want to go with. And JMMB is a broker, of course. One thing to bear in mind is that brokers sometimes have stipulations as to the minimum amount of money you need to open that brokerage account so you can start your trading activity. Some brokers respectfully have very high starting balances, like in the region of $250,000. And other brokers, like a JMMB, we really only require like $10,000 Jamaican to start the account, although I've heard of folks who have started with less. But the key is just to make sure that you have enough money in your brokerage account at the time that you want to do that trade. And yes, you're right. Technology, JMMB Moneyline has an awesome trading platform that gives you the opportunity to indicate which shares you want to buy, which ones you want to sell, and so on and so forth. And it really makes it very convenient. And all you're really paying is a fee, a commission fee for the value of the trade that you're buying or that you're making, whether you're buying or selling. Again, brokers have different fee structures. Ours, I think, is like 0.5% of the value of that trade you're making. So again, it's up to you to decide which broker you want to go with. So that's great to know, Peter. And again, very easy to take advantage of. As we talk about shares, though, you have something called an ordinary share and a preference share, right? So JMMB would have had a preference share offer the other day. We have a couple of preference shares listed on the Jamaica Stock Exchange, but you can also buy ordinary shares in JMMB as well. What are they and what's the difference between them so everybody's clear?
All right, good. So the ordinary share, I like to describe that as the riskiest of the owners of the company. So this is the owner of the company, that he's the last person to get paid, right? So he's also the person that gets what I call the residual value. So after we've paid everybody, whatever is left belongs to the ordinary shareholder. The preference shareholder, as the name states, he is preferred over the ordinary in the sense that he has to get paid first. Now, the trade-off for that is that the return on a preference share is fixed. For example, just picking a random number, 7.25% on a 5-year type of preference share with monthly cash flow. That is a fixed preference share, paying a fixed amount of money every year for a duration, for a particular period of time. So the ordinary share, however, there's no cap on how much money it can earn. You are getting all the earnings after we've paid the preference shares, paid bondholders, or paid the bank, or paid debt holders. Whatever is left belongs to the ordinary shareholders. These are the owners of the company, so they're the last to get paid. The ordinary shareholder, however, they have the right to appoint the board of directors to actually manage the company. So the ordinary shareholder, each AGM, annual general meeting, ordinary shareholder gets to have their say. They don't like what's happening with it in the direction of the company, theoretically speaking. The shareholders can all decide, so, okay, we don't want the slate of directors, let's switch them out. The preference shareholder, they don't have anything like that. So the preference shareholder is basically, unless they're in there for a fixed return, they just want nice steady cash flow. They don't want any upside or long-term growth in the company. They're just there for a return, and for that they give up the right to appoint directors and vote. So the preference share, just for clarity, has preference in getting its dividends. They get dividends before the ordinary shareholder, but it's capped.
Awesome clarification, because it kind of leads to the next question, because we spoke about the fact that anybody 18 and over technically can buy stocks, and ideally it would be nice to do it through a broker. It's easier, made simple. But I think someone asked a question here as well. How do I know that investing in stocks is right for me? Because there seems to be a thinking that, well, we've dispelled the myth that is only for rich people. So we do it with that, because you can buy stocks with as little as $1,000, depending on which stock you're buying, the price, etc. But the question is, how do I know? What questions do I need to ask myself to know that, boy, investing in stocks is right for me?
All right, excellent question. And I actually waiting for this one, right? So there is, over the last, I'd say 3 or so years, there has been this myth that came up about that investing in stocks is a short-term thing, is quick money. Over the last couple of months or a couple of years, it has, right? As in what we call a bull market going up. So you buy today and then 1 month after you're able to sell at higher value. Stock investment in general is not a short-term investment. Investing in stocks is a long-term investment. So can you imagine the person who bought stocks March 1 of last year? That was right before COVID was, was a thing in Jamaica. March 12, we saw stock market fell. So most stocks, if not all stocks, fell from that value. So if your expectation going in is that, okay, I'm going to make a quick money in 1 month, then you would have been significantly disappointed. So stocks is right for you if your investment horizon, if you know that, okay, I have some objective that is, 4 years and above, 3 years if you're doing dividend stocks. But the idea behind it is that when you're buying the stock, you should be thinking that this thing is not a short-term investment, it's a long-term investment. So, and if you again go to the core of it, no one says I'm going to start a company and I'm going to sell this company in 2 days or 1 month. Remember, when you buy a stock, you are buying the piece of a company. Now, the returns from that company or the value from that company may not be a 1 quarter or a 1 year thing. It may take some time to show value. So for me, the essence of it is, you know that you're able to buy stocks, or you should be buying stock if you have a medium to long-term time horizon, and you can sleep at night knowing that, okay, you're invested in a solid company, and even if you should see the value of it cut in half, which is possible, you are not going to lose sleep over it. So the whole essence of investing in a company, I think, is what people need to take away from when I'm buying a stock. I'm buying this company, and I'm going to benefit from the long-term growth in this company. Now, if in the short term, there is an opportunity to take some money off the table, to sell some of your stocks, that's perfectly okay. But it shouldn't be a principle going in that I am going to make some quick money, because 9 out of 10 times, that's not the case. And just as how it goes up quickly, it could go down quickly also. Oh, Kerry, you're doing the quiet thing. I think you're on mute.
It happened to me all the time. Right, guys? I'm always guilty. I mute so I can cough and don't disturb Peter when I start talking again. I don't unmute. Thanks, Peter. So I wanted to acknowledge everybody in the comments, actually, because I see the questions coming in. Want to big up everybody who's been saying hello. Yes, hi, Carrie. I see you. Welcome. Hey, Tamayo. I love it. And man, these names, don't kill me if I mispronounce them. I see Kefash or Kifash. I'm sorry. Lydia, if I mispronounced it. Lydia, what's happening? Odian, don't send us an invoice for all of these things. I love the support you're giving us in the comment. Don't send me no invoice tomorrow. Can't afford you. Richard, how you doing? Yes, seeing the questions coming in. Hey, Mrs. Brown, good to see you. And Sanciara, a great question, and I'm going to have Peter address it a little later on when we get to that topic. But this is great stuff, guys. Yes, and remember, call your family and friends if they're missing this. We don't want them to miss information. Now, Peter, just real quick, because you spoke about a while ago, you were mentioning the fact that, it's really investing in stocks is not something you should go in expecting a guaranteed return unless you're buying preference shares, right? That has that built in there. And you really shouldn't be expecting a quick buck. And I think that is probably what a lot of people seem to be struggling with, especially coming out of the bull run that we had a couple of years back. We're probably kind of spoiled because, you buy this stock and then a month later, it's gone up by 30%. And then, everybody's happy. And we don't want people to get into that vibe because now in the bear market, everybody is upset. You know what I'm saying? My question is, though, it's probably a little sidebar question. Is there any way, and we touched on it last week, if I don't want to buy into a particular company or companies, is there anything like, we spoke about like indices, any indices I can buy into? Or suppose I want to get into like an equity-based or stock-based unit trust, What are some of the ways that I can still invest in stocks without going in totally bare, what I mean, into basic stocks?
And excellent question. So the real issue in determining whether or not you should buy indices or buy index fund or a unit trust is basically how much money do I have and how much time do I have, right? So if it is that you're a small investor, all right, let's say you start off with your $10,000. With that $10,000, you could probably buy 100 shares in some company, or a company that probably costs $10. So you could buy 100 shares of that. However, for prudent investing, never ever put your eggs in one basket. Your grandmother was correct, right? So just putting all your fortunes in one company with your $1,000 or $10,000 may not be the best option to do it. So if you want a diversified portfolio or a diversified number of equities, so when you buy a unit trust, it gives you that diversification, because when you buy into a unit trust, you're buying into 20, 30 stocks in that one unit trust. So all your fortunes and fame is not tied to that one single stock. So if you're a small investor, the unit trust offers that ability for you to get in, get the diversification, and you're getting an active management. There are some questions also in the comment about indices. So over the years, and there has been this development of indices, and this is an educational forum, so it exists. So we're going to talk about it. So Sagicor, calling the name, commit crime, but Sagicor has an index fund. They have a financial index fund, and they have a manufacturing index fund, which you buy that, and basically all you're getting is the performance of the index. So it's not an active managed fund, meaning they're not in there buying and selling. It's a set it and forget it portfolio. They buy all the financial companies, they put it in the portfolio, and they set it and forget it. They rebalance every now and then if something should happen where they need to take out a stock or not. But the principle behind it is you are buying into an index. It's a set it and forget it type of portfolio, and you're just benefiting from passive, what I call passive management, or just leave it alone and make it do what it's supposed to do. Now, which one you choose is a function, again, of your risk tolerance, the time horizon, and the time that you have. Because you could, with X amount of right amount of money, buy 10 stocks and get diversification. You could build it out yourself, or you could opt to say, okay, I want active management versus passive management associated with an indices or an index fund. So it all depends on what your objective is. And once you have that objective and that goal in mind, you talk to your advisor and they can kind of guide you in which way to go.
Love that. So just to recap, because I see a lot of people lighting up, and we're going to clarify what the index is in a little while. But a lot of people were lighting up the comments with questions around the unit trust, which is basically what you're talking about. So you're talking about it's really like a pooled fund where lots of investors, big and small, can buy units in the fund, right? Like how you buy units of stock in a company, you buy units in the fund, and Peter and his team of experts takes that fund and invests it in a whole heap of different things, whole heap of different stocks. So instead of you taking your $10,000 and go buy stock in one company, you buy X amount of $10,000 worth of units in a unit trust fund. And Peter, you can benefit from diversification, buying many different stocks as part of that fund, and benefit from it. And a lot of people prefer that because it kind of helps with that cushion. Because if you put all your money in one stock, and something, God forbid, that stock go in the direction you don't want it to go, even for a while, you may not have the stomach for it. A unit trust gives you the opportunity to sometimes cushion that. But I saw Sanciara, and I know she probably want to reach through the screen and beat your bottom, because in her mind, income and growth not going with nothing, Peter. What's going on?
Excellent
are like,
point.
What happened there?
Yes. So, and again, in the income and growth, again, remember, something happened last year, 2020. I know a lot of people probably just totally forget it. I want to forget it also, but it existed, right? So last year, every single company, well, let me take that back. The majority of the stock exchange stocks listed on the stock exchange fell, especially the big names. So, for example, an NCB at the start of last year, 2020, was like at $200, $190 something. and at the end of the year was close to 130. So the performance of the unit trust, right, is a function of, okay, what's happening in the general market. So all stocks fell. It was a pandemic, everything fell. However, and I think I remember having this discussion last year, this time, where I said, guys, thou shall not panic. As a matter of fact, you should not be looking to buy when it's at the top. You look to buy when it's at the bottom. So from that day, I did a quick analysis. If from that day you had bought, relative to now, you'd actually be up close to 12 or 13%. So when we show you the performance of the unit trust, we're showing you the performance of the unit trust probably from January 1 until now. And from January 1 till now, it's around 3%. From last year, this time to now, it's around 8%. So in terms of the performance of it, it's going to have its ebbs and flow. So what I think we need to be looking at it from a unit trust perspective or investment perspective, think I am investing over time towards a particular objective. And if you're watching it, especially the stock-based ones, you could have, you know, significant challenges if you panic, because you panic, you lose money when you panic. So I had a conversation last year, and yet still people sold and lock in some losses when all they had to do is just wait, and as expected, the market turned. So for the fund, for the unit trust that we manage, we were actually buying stocks when they were down, which that is the principle. You buy when it's low. And no, so over time, we expect to see a significant improvement in that. So let's look at it in isolation. Yes, it could have been better. But you know, we remember that we went through a little pandemic, and there was a time in which everybody was even afraid to go outside, right? So, you know, as we get more comfortable in terms of operating this new normal and, you know, making investment decisions, we do expect that this thing will pay off. So Sansia, we're watching it, and we are taking actions to actually make this thing work out. So again, repeating it like a prophet, just relax, it will work out.
That's right. Because the thing is, if the income and growth fund is really underbirthed with stocks, and if the stock market ain't doing well, then that's really it's a function of that. But I think that's a great clarification. And you really only need a few $1,000s to get started with the unit trust as well. So for those people who are not really confident about choosing stocks on their own, and you know, they still want to get their feet wet in stocks. I know for me as a younger investor, when I just started working, unit trust was my first foray into investing in stocks, and I still have my unit trust. And you know, I do buy stocks individually as well. So everybody's just, you know, what works for you. And as always, we recommend you speak to a licensed financial advisor to get the advice that you need to be able to make the right decisions, right? Now, so Peter, this is great. I think we're getting some awesome stuff done. Somebody was asking the difference between, well, unit trust and our portfolio plans like Wealth Builder and Graduate. How are they different from unit trust?
All right. So the Wealth Builder / Graduates are they're made up of unit trust. So imagine you walk in and say, okay, I want a Wealth Builder product. What you're in essence doing is that you're saying, JMMB, here is $10,000 or $20,000, and I promise to put in another $5,000 or $10,000 every month for the remainder of next 5 years. What automatically happens is that your money is then allocated among different unit trusts rather than just by the income and growth or the bond fund or the optimum capital. What we do is that then we allocate your money according to your risk tolerance and time horizon. So the person who has a long-term time horizon is very aggressive. They're going to get a large portion of stocks and real estate type investments in their portfolio versus in the Wealth Builder, versus someone who's very conservative and want your money in 2 years. They're going to get a lot of bond type investment or bond unit trust. So the unit trusts are individual funds that you can pick. You can say, okay, I want to buy the income and growth alone. We're saying, okay, yes, that gives you some diversification in stocks, because it's not one stock you're buying technically, you're investing in easily 30 stocks when you're buying to the income and growth. However, all of your money is in stocks. Versus if you say, okay, you're doing it through the wealth builder, what you're in essence doing is that you're saying, JMMB, manage my allocation. So if something changes in my life, or as I get closer to my goal, rebalance me. So we, in the background, we are actively buying and selling the unit trust in alignment with what we either see in the market or what we see happening to you as a person. So if you, when you started this, you were very aggressive, as in your risk tolerance was very aggressive. And then 1 year after that, you know, something happened in your life and you're no longer aggressive, we automatically rebalance you from within the same product, but we're rebalancing you down to something that's less risky. So it's still it's in line with your risk tolerance and time horizon. So the beauty of it is that we're trying to find the thing that works specifically for you. So it's quite possible that you have two persons with two wealth builders and they're getting two different returns, because one has a more longer time horizon and is more risky, and as such what's in their wealth builder is different from your wealth builder. So again, the sweet spot is that we at JMMB, my team, we have the ability to change out the unit trust. So let's say a new unit trust come on board, or a new unit trust exists. You don't have to worry and say, okay, I'm going to try and find out about it and see if I could put some money in it. We automatically look at it and say, does it fit your profile and your risk tolerance and time horizon? We automatically rebalance you in there. So it's an active portfolio, but the thing that we're using is unit trust to actually get you that exposure. And we try and match it with your time horizon and risk tolerance.
Love that, love that. And so basically, so there are many ways to skin the cat then, Peter. And I mean, we just want to wrap up the unit trust, which is just like a mutual fund. I think somebody was asking what's the difference, more or less the same, right? And then we have our portfolio solutions like our wealth builder and our graduate, and you can have one for retirement as well. I have different portfolio. I have one for my girls' college education. I put a little money in that every month. I have one for my retirement. So, you know, it's up to you to do what works for you. And again, the different time horizon. Of course, my girl's not going to go to college for another 15 years. So that have one time horizon versus my retirement, which has another. So that's the thing. And a gilt edge fund, Samarcia, is one of our unit trusts, which you would have spoken about. So I think, you know, let's just wrap that. So it's a few $1,000s to get started in the unit trust. For our portfolios like Wealth Builder and Graduate, you need 50,000 Jamaican to start, or 500 US. But again, that is if you want. Or what again, the unit trust is just a few $1,000s. I'm talking probably $10,000, give or take, Jamaican, to get started. And anybody, and we have different unit trusts for different risk appetite levels or different investments that underlie the unit trust. I'm loving these questions, guys. You're keeping us busy. So guys, remember to be clear. If you have us, first of all, we're dealing with stocks on this show, right? It's live tonight. So unfortunately, we won't be getting to other types of questions that don't really have anything to do with stocks. So we ask you, if you want to have a conversation, then send us a DM with your contact information. Guys, please don't ask personal questions about your account with JMMB in the chat, in the comments. No, please. Don't put your private telephone number and all these things and account number and thing. No, please. This is the interweb. Please don't put it out there. Not everybody is well intentioned. DM us your questions, and we will, if you have a personal and specific question to your account, DM us and we'll have a representative contact you next business day. Please, guys, because I think everybody kind of gone home. It's curfew. So please, guys, thank you so much. But we're excited. So Peter, the big question, one of the big questions now that everybody would like to know. Well, before we get to that, because some persons were asking about investing in stocks overseas. How do I do that?
Yeah. So again, you need a broker, right? So similar to how it works in Jamaica, you need a broker. Now, there are brokers. So even though it's your online brokers are what we call low-cost brokers that allow you to start trading with a small amount of money. As a U.S. citizen, it's much easier. So everybody would have heard of, your Robinhood website or your brokerage, which allows you American citizens to sign up and start trading with $500. So there are a number of online brokers, overseas brokers that allow you to trade international stocks. JMMB, just to drop in a plug for our friends in Trinidad. So in Trinidad, where that market, they're much more into international stocks, we rolled out a year or two ago our international stock platform, which allows clients to actually trade international stocks on that platform. It's doing quite well in that jurisdiction, and especially during the lockdown, we saw a lot of activity there. So the good news is, if we get a lot of requests, hint in terms of what you send, Kerry, we could easily bring that to Jamaica to allow our clients in Jamaica to also get that JMMB experience of trading international stocks. So JMMB, we see ourselves as an international company. So if there's demand for it in Jamaica, we have no problem in bringing it to our Jamaican clients to allow them to participate. So again, it's you need a brokerage. You have to go through a broker. So even though it may seem like a website, technically speaking, you're going through some background broker in the background, where the cost may be extremely cheap, or they have different models. But the idea behind it is that you're not selling directly to John Brown. You're selling on an exchange, and there's somebody there acting as that intermediary to ensure that everything runs smooth. So you need that online broker. JMMB has one through our Trinidad company, and look out for it. You may just see it this side of the world soon.
All right, thank you very much. Great. So yes, so be on the lookout for that, and stay tuned. As I like to tell people, follow us on social media. That's where you get the latest of what's out there. So yes, that would be wonderful. Just a couple of quick questions here while we deal with housekeeping matters before we ask the top 2 questions of the night. Can I open a stock account, or MR? JMMB's brokerage account is called the Equity Money Management Account.
Correct.
And EMMA, AEMMA is the acronym. Can I open one for my child?
Yeah, once an adult is on their account, so technically it's your account and the child is on it also. Because children can't sign legal contracts. So it's you, but you can add your minor.
Love that. Thank you so much. Great clarifying question. All right, so let us jump into what I think is the #1 question. I see it asked in many different corners. Ashley, thank you for acknowledging that. I'm going to check. I didn't know about that change to 100,000 from 50,000. So Ashley, I didn't get that memo. And it looks like Peter didn't get it either. So we're going to check that out and clarify for everybody the starting amount for the wealth builder. But we'll check on that. But the big question of the night, one of the 2, Peter, and I see it in different forms in the chat. How do I know which stocks to buy?
All right, the $1 billion dollar question. So I'm going to kind of let out a little secret, right? We're not 100% sure, right, which stock to buy, right? Because if I knew today which stock will go up tomorrow, as in, and no is not, I'm not using the word no loosely. No means 100% sure. Then I would be handing out dollar bills tomorrow, a couple of weeks from now, because I would be a very wealthy man. So we don't know 100%, right? What we do know is that we know where to find value. So to take the question another way, the stock that is I buy in my portfolio and I put as a part of my investment is different, maybe different from the stocks that Kerry buys in her portfolio. I may be more risk loving than Kerry, and as such, I may be buying stocks that when I look at their performance, or I look at their business model, it's a little bit shaky. But I may have a longer time horizon, and as such, I'm willing to take that risk or put X amount of that in my overall portfolio. So when you're buying, think about it. stocks, you are buying a piece of someone's company. So if you're buying someone's company, you're not just going to say, oh, I hear that Johnny start a company, I'm going to put some money in there. No, you're going to do your research. You're going to figure out, okay, what industry is Johnny in? How does Johnny make money? So you have people buying stocks and don't have a clue about how the company actually makes money. So they're just going in blind because they hear that a friend bought it. So when you're buying a company, or when you're trading, when you're investing in a company, you have to do your homework. I think I covered that last week in terms of, is this the industry that I think will make sense? Once you then find the industry, and case in point, the shipping industry, or logistics industry, we may expect so it may do good. So we then drill down and say, okay, who is the dominant player, or which company within this industry is going to be the winner in the next couple of years? That I think. So again, it requires research. You have to know, so okay, do the work, do the analysis to say, okay, this makes sense. Now, the good thing about it is that you don't have to have a CFA charter or a PhD in finance to actually be able to get this information. Companies like JMMB, we send out research on all of these companies that we follow. So companies that we think are on our recommended list, we send it out, and we don't just say, okay, buy this stuff because, you know, the name sounds nice. We actually give a rationale. So how do you know what to buy is a function of your risk tolerance and also your time horizon. That's one thing. And then more importantly, where is the value? Because you're trying to invest in something that will do well, not poorly. So you first have to analyze and say, okay, which market do I want to invest in? Do I invest in the Jamaican market or the US dollar market? Once you pick the market, then you're going to try and pick which sector makes sense. And then once you pick sector, then you're going to drill down and say, okay, I'm going to buy this particular company after you've gotten the information about it. Now, there's an entire discussion on valuation. And just a quick thing about valuation, because when you're buying a company, you want to buy the company cheap, right? You want to buy the company at a low price, at a low valuation. So there's a difference, and actually hold this company until the value, everybody else realize that, oh, this is a sleeping giant. This company is undervalued, and then jump in. So what the research comes to you, there is certain metrics about whether or not this thing is undervalued or overvalued. And when at the core of every company, when you buy a company, you're buying the future profits of this company. Yes, you don't know what the future profits are, but they're estimates. You can say, okay, this company made $1 billion last year. Over the last 5 years, they've been growing at 10%. If they continue this over time, there's a way to actually find out what the value of that company is. No. And then if that value is lower, if that value is higher than the price it's selling at now is when you should be buying it. Again, the stocks are companies. So when you buy a stock, you're buying a piece of a guy's company. And similar how you wouldn't pass somebody's fruit stand and just say, okay, I like how the fruits look nice, I'm going to buy the entire stand. No, you're going to look, how much money is this company making? Will this company exist tomorrow? What is the growth, the potential for this company? So that is why we see internationally, a lot of people just say, okay, this is too much work. Let me give it to somebody who every day, that's all they get up and do. And in the nights at 4 o'clock, they get up and look at what's happening in the different markets, and the wife tell them to go to bed, but this is what they're doing, right? So the essence of it, it takes a lot of work to know where those hidden gems are. And as such, 9 out of 10 times people give professionals to do it. However, that doesn't say, information now is democratized where everybody can get information. You can do your research. Question is, do you have the time and effort, and with your boss allow you to spend many hours researching stocks rather than doing the 9 to 5? So if you have the time, there's a set procedure around how to actually pick these stocks and find value. But what you're really doing, you're buying companies that are undervalued. You're holding those companies until either one, you've met your investment objective, or two, something fundamentally changed around the company, and as such as you're getting out, or three, you've made so much money that okay, you're taking some off the table. You own 100 units, value of it went up significantly. Never get poor by taking some of those gains and taking it in and turning it into cash. I know that was a mouthful.
Yes. But
So
we're gonna backtrack. Well, first of all, I want to remind everybody that even though we're live streaming this conversation right now, guys, it is being recorded. So we're recording all of this entire episode here tonight. It's gonna be uploaded once we say good night. Here we will be uploading it to our social media platforms. It should be available on YouTube almost immediately, and it will be available on Facebook as well. So you can go back, watch the replay, share it with a friend, and take your time and stop and rewind and make your notes. So no worries about the pace of it. It's being recorded. The other thing too is that I want to just kind of clarify, because we don't publish a recommended list of stocks to buy at any point in time, Peter. What we do provide, because that can get us into trouble as well, because what stock which works for you and your risk appetite and your time horizon is different from me. And then I will buy a stock and I don't have the stomach for it, or I'm not really sure on what I'm doing, and then I buy it and then something goes wrong and I say, Peter, tell me to buy it, all wicked brute. No, we what we do is we provide you with all the information you need to do your research. So I know Jessica, our admin, is working hard in the chat. So guys, if you go on our website, jm.jmmb.com, right there on the home page, you'll see two awesome locations. One in the primary navigation bar, you'll see Market Insights. If you click on Market Insights, you'll see all of the research that we make available, which tells you about the different companies, publicly listed companies, and our recommendations at the time of whether or not this is something you should hold or buy or have it at market weight, what have you. And then also on that home page, in like the second or third bar down, you can subscribe to our JMMB Financial Market Color newsletter, which is an awesome newsletter that goes out every Friday that kind of gives you a recap of what happens in the market and other types of information. So guys, lots of information that's available, and we encourage you to take advantage of it, because it's all there for you to make your decisions wisely. And again, if you're not comfortable, you speak to a licensed financial advisor, or as Peter said, you can think of options like a unit trust based in stocks, or one of JMMB's portfolio solutions like a wealth builder, which takes the headache out of you having to watch things ever so often if you're just not there yet. It is what it is. So thank you so much, guys. It's awesome. Loving it. Hey, Kevin, don't worry, late, but still great. As I said, we're recording this. So please check it out. Check out the replay. Watch it on demand for however you like. Yes. So love it. Yes, audience. So Peter, just to be clear, what are some of the things I'm looking for? Because another, when you were talking about what stocks to buy, so we're in COVID time, right? Unfortunately, a lot of companies have not fared well in the pandemic economy. And then there's some that have fared better than others. And even whether COVID was on or not, there are certain things that you said you're looking for if the company is growing. What are some of the things we need to look at in an industry or in a company to know, well, okay, this looks like an industry where there's opportunity for me to look at companies I can buy shares in?
All right. So a company, or remember with stocks, you're trying to buy the stock at a price that is cheaper, as in it's undervalued. So basically, somebody, because when you buy a stock, somebody's selling it to you. Now, if you really think about the psychology of that, you're buying something that somebody's selling it. Clearly, there's a reason the person is selling it. So the question is, do you know something that the person don't know? So there's this game that is always being played. The person selling it is believing that, hey, this thing won't work out, and that's what trying to trade away. You're buying it because it's clearly there must be a reason that you're buying it. So the question is, what is that reason? So your information around this, well, let me take one step back. So last year this time, when stocks were falling, people were selling stocks because they were panicking. They were making a decision that wasn't based on, okay, I know or I feel. They were saying, okay, world is coming to an end. Let me just sell everything and run. So even they're saying that in the industry, I was saying, right? So patient money takes advantage of impatient money. So if someone is impatient, they will be throwing away value every day. They're holding the stock, and for 2 months, 3 months, it's not performing. They say, I'm just getting out of it, and they're throwing away a good company. So after you've done your homework, and you're saying, okay, here is a company that is dominant in its industry. Let's stay local, and let's look at financial companies. So financial companies represent the biggest. They're the biggest companies listed on the Jamaica Stock Exchange. The stock market cannot move in any significant way up unless financial companies move. So your JMMBs, your NCBs, your Scotias, those dominate the industry. So yes, when the stock price for those companies fell, the entire index fell. So the question is, when I'm buying a stock, I am not buying the stock based on the past performance. I'm buying the stock based on the future. So the question you need to ask yourself, when I buy this company, I'm buying the future earnings of this company. What do I expect about the future earnings of this company? How much dividends will they pay? Will their profit improve? So first, I need to understand, okay, how does the company make money? So for me, I like the financial sector, because when a recession is ending, they're the ones that will come out quicker, and because of their sheer size and dominance. So people always want loans. When you look at the amount of money in deposits, and even during a pandemic, when we look at the overall impact of the pandemic on financial companies, initially I could understand there's uncertainty, we don't know what will happen. But as time unfolds and you get more information, you look at it and say, okay, how's your performance? How have you fared during the pandemic? Even more importantly, again, looking forward, we don't care about the past when we buy a stock. That's the person who sold it to us, they cared about that. We're looking forward. So we need to figure out what is the strategic direction at the company, what is management saying, what is the board saying about what they're going to change in their business model to make money. So for me, it is the companies that are able to do that well, are able to articulate that I have a business model that will see us recovering from any downturn or any pandemic, or we're going to make our business model pandemic proof. Now, during the pandemic, or at the wobbly stage of the pandemic, or the height of the pandemic, I should say, we looked at it and said, okay, who will benefit from everybody being locked up and not able to go outside? And when we looked around logistic companies. Which logistic companies listed? Oh, here is one in the form of Mailpack. And you'll remember Mailpack was selling as close to $80 something at that time. Did some quick analysis. If you really looked at the earnings potential and the dividend that Mailpack was paying at $1.86, and if you annualize the dividends that you're paying or looking to pay, it would be equal to like a 10% return just on the dividends that they're going to be paying. At $3.50 and 60 cents, the $10% dividend yield is not so high. However, the 10% return from just the dividends may not be there anymore. But what we do is that we look at who will benefit from a particular situation. When oil prices were low internationally, you look at which companies use oil as a big part of their production process and are able to sell their finished product at a lower cost. Again, it just so happened that companies moving things across the country, your Amazon, and those were also the companies that benefited. So in looking within any situation, yes, it's important to look at the now, but you're always trying to figure out going forward, what will happen going forward? How should I position? Which company should I position which company should I buy? Which company should I invest in? And that is the answer to that is which company will do better in the future. Now, there's a whole discussion around the pricing of these companies, which is a little involved, but the idea behind it is that I'm trying to figure out what the future earnings from this company is and adding them up, factoring that into say, okay, the value of it, if the company grows by X, this is the price, and you compare that relative to other companies to know whether or not it's undervalued or overvalued. But at the core of it, even outside of price, because price on any given day may be up or down, but from a long-term perspective, you are trying to find that company that will benefit from something in the future. So at one point in time, internationally, Amazon wasn't making any money, zero money. As in, Amazon was losing money every year. But the business model of Amazon at the time, Amazon was saying, okay, I know what I'm doing. I'm paying people to come on my platform indirectly, because Amazon business model, they would buy the things, or as a middleman, they would be trying to sell it cheaper than anybody else online. And that way they're getting more loyal customers. And as such, they built up the extremely huge base of loyal clients. And as such, all they need to do is turn the dial up to make money. And that's what they did. They stopped, they changed their business model in terms of how they charge fees and automatically start making money. So we need to find, if you're going to invest in one company, you need to basically try and find that Amazon. Now, how good you're at doing that is another thing, but you're looking, the idea of picking future winners is a function of knowing what will happen. And knowing is kind of strong because nobody really knows, but to the best of your knowledge, you're trying to use current information and try and identify who will benefit from a particular situation and try to position your investments in these companies.
That's a great one. I'm seeing a question from Kerry, so I'm calling Peter all kinds of names. But Peter, I think that's a great explanation, because what you're really doing is you're encouraging people to look at what's going to happen in the future. You mentioned mail pack. So when you think about it, when the pandemic started, and people were selling for various reasons. You mentioned one of the reasons was panic. Ashley raised a very important point that maybe some people were caught in a bind and had to liquidate because they needed the cash right away, because unfortunately a lot of folks were caught with their pants down in the pandemic economy. But there was an opportunity, and I think there still is, to look at who's going to benefit, because in the pandemic economy, who's going to thrive? Nobody can move. It's curfew and lockdown. So the delivery folks like Mailpack, you mentioned Amazon overseas, case in point. The food people, right? Because if it's one thing you need in a pandemic, of all the important things, is you're going to need your food. So all the food companies, the broilers, the Separads, the Grace Kenneth, Grace Foods, the Melascos, and so on, those would have been great opportunity companies to consider the future. Odian is speculating here in the comments that even though tourism related stocks which are getting a beating now, if we have vaccine and possible positive projections of the future, they could be positioned for a nice turnaround. So you may want to think about getting that in now. It's just something to think about, and I think that's really rich food for thought.
That's an excellent point, right? So because again, yes, the today's trash, maybe tomorrow's treasure. So the idea is there will come a time in which you're going to be looking at entertainment and travel and leisure stocks. So the question is it now? Is it 2 months from now? And again, are all entertainment and travel and leisure stocks the same? It requires some work and management articulating, okay, this is our strategy. Because what we do know is that tourists will come back to Jamaica. How many, and what form, what the time it takes.
And when, yeah.
We are not 100% sure, but it will. So the question is, all right, when I look at our entertainment stock or a tourism stock, related stock, what price is it selling at now? And is it cheap enough for me to buy it? And again, cheap does not necessarily mean, okay, it's selling at 50 cents. It is, if I should invest in this company now, based on the projected earnings, how long will it take me to get back my money? that I've invested in it. So really, it's, you know, high level, that's what it really is. So it's not necessarily all stocks are made equal or all entertaining, but I would agree that, you know, there will come a time for us to start looking at these tourism related stocks and say, okay, what's over there? Is there value to look at them? But again, the work, you have to do the work to really get the understanding.
And in a similar vein, Peter, because I saw, I mean, these comments are flying fast and furious that I'm trying to find back questions, but I remember them, so it's not a problem. There was a question about, you know, what determines the price of a stock? And that's the thing, you know, somebody mentioned, I forget who it was, I don't know if it was Kevon or Kefash, I couldn't remember, but it's like, okay, so I bought a stock in IPO and now the price lower than the IPO, you know,
right?
Or you think these stocks are so valuable and they're doing so well and they're making good profit, but yet the price still sucks, you know. What determines the price of a stock, Peter? I mean, you know.
So really and truly, it's demand and supply, right? So and I was watching something that Warren Buffett was doing. So Warren Buffett doesn't look at the daily movement in the stock price. He could care less, because remember, the stock price, that price that you see every day, that is not saying that fundamentally that is the price of the company. What it is saying that today somebody was willing to buy the stock at $10 and somebody wanted to buy it at $10. Price done. That's what it means. Now, if the entire company was selling, would it have been sold at $10? Definitely not, right? So the price that you see traded on the stock exchange every day is an indication of what's really happening. But I would not tie your entire fortune and you know, lose sleep when they say, okay, the price is significantly low, because there are a number of factors. So right now, and retail investors, so in general, people are saying, okay, pandemic, people may be going through different situations in their personal investment life, so they may not be looking at stocks. So a lot of people may not have the ability to come back in the market and invest. And even for those who, you know, were in the market before, they may be afraid to buy stocks again. Why? Because, you know, they probably buy NCB at 210 and it's now 130 and they panic. Why? Their expectation was that if I buy it at 210, it's going to be $300, versus knowing, so, okay, I bought it at 210, pandemic hit, it's now at 130. The question is, do I buy more? Do I look at it as a fundamental business model at NCB, one in which that they won't make money in the future? Or pick a name again, JMMB. You look at the stock, it was trading at $30 or $40, $40 or $50. Now it's at 31. Is there value there? So the price that you see every day, especially in our market, is a function of somebody out there looking to buy at that particular price and somebody's looking to sell. So to your point related to the IPO, you bought it in the IPO. For whatever reason, people started saying, you know, I'm going to take my money out. I'm going to sell. I'm going to sell as much as I can now, because, you know, I want money to probably pay next month's rent. Because yes, people in 2020 thought that, okay, stocks was a great investment. I can't lose. I'm going to use the rent money. Yes, the landlord is going to come for it at the end of the month. All right, so I'm going to do it now and, you know, flip it. Very bad idea. So the whole conversation, so that person may have sold their IPO stock because they needed the money. Somebody said, okay, a great deal, and they bought it. So that reflects the price. So it's quite possible for the stock to be trading below its IPO price. However, the company may still be earning money and say, okay, I'm going to be paying out dividends same way. We are earning money, we're making profit, we're going to continue paying out dividends. But if people not buying the stock, or people not willing to pay more for the stock than what somebody's willing to sell it at, then the stock price won't move as much. No, I don't want us to leave the conversation believing that the market price is not a reflection of what is really happening with the company, because if people are not excited about the stock, then the price won't move, right? However, recognize that you are in a market, and there's no like magic thing where the magic price will just appear. It is the interaction of people buying and selling, and people may not notice or not. So if not a brand name stock, people totally ignore it and say, okay, I don't have any time to pay attention to that stock. Don't do the work and say, okay, it may be a thing. And as such, they may not want to buy it, and as such, it's reflected in the price. But so the price is just an indicator of value. The real value is, okay, how much money is this company making, and what can I expect from the company going forward? So even right now, you could have, if I'm looking at a company and the company is making money right now, not only am I looking at the dollar value that it's making, I'm looking at the quote unquote quality of its earning. Can they replicate the earnings that they did last year? Can they do it again? Because again, I'm not buying last year's earnings. I'm buying next year's earning. So how will they do in the future? I look at it and say, okay, where did they make their money from? Is it a one-off thing? Can they do it again? And then if I realize that, okay, a big part of their earnings is replicatable, they can continue doing it. I'll say, okay, I'll look at it. Even more importantly, if management is not able, or the board and the entire organization is not able to articulate a strategy as to, okay, how are we going to grow in this new environment or do what we need to do? Then it's time to look at the stock and say, you know, I'm going to give it you know, I'll wait a little bit until somebody talk to me. Because remember, you are buying a company. So again, you're not going to buy a company and every day just walk past it. If you are an investor in a company, invest some money in Miss Johnny shop, each day you go probably pass and see whether or not that there's a long line at Miss Johnny shop, because you know, so earnings are going to be made. If you hear that Miss Johnny's shop or Miss Johnny's son a thief out some of the money, you're going to be concerned. What type of structure is in place to ensure that when the money comes in, it's able to go straight to the bank in terms of profit? So all of that is just at a high level. That's, you know, a simplification of what you should be looking at. How will the company make money? What's its check and balance in store? What's its strategy to grow? All of those things. And if you don't have the time to do that, get a professional to support you.
Right. And I think that's great, Peter. And just to be clear, I mean, Everald is supporting the point on Facebook. You know, you want to look at the annual report, right? So you're talking about what's going to happen to the future, in the future. Look at the company's annual report, the conversations that they're having about their future plans. What are they going to be up to? Again, you are keeping abreast of what's happening in the economy, whether or not the company can replicate what it did last year. Annual general meeting, you know, try and attend those, or certainly get access to them somehow. A lot of them are now online in the pandemic, and hopefully that will continue going forward. You know, just really get into these organizations and have a look. I mean, there was a great question coming in from, I think is Samarcia on Facebook, really asking the question, well, should we put a hold on buying stocks in these uncertain times? Because that's a question that a lot of people have.
All right. Again, so there's uncertain times in the sense that, okay, we don't know what will happen. Well, no one knows what will happen tomorrow, right? But, and I hate to use this example, right? Even when there's blood in the streets, somebody's making money. It's a weird way to say it, right? But so I don't like to say, okay, stop buying all stocks, because what that is doing, there is trash in all of what's happening. There are companies that will do well going forward. No, and this is you raise a very good point. It's an excellent question, because internally we look at it also, right? We look at it and we look at it and I'm saying the pandemic is still here. More people are dying now than they were dying in March of last year, right? There are more COVID cases and all of that. What we do know, however, is that there is a vaccine. So there's an end in sight. No, it will be choppy. It's not business as usual yet. However, to say that I'm going to stop buying stocks altogether, that's not, I wouldn't say that's a sound strategy, because you may be giving up value that's lying on the floor. So again, you're not looking to buy when things are high. You're looking to buy when things are low. Now, yes, there are some companies that may not make it through the pandemic, right? As in, it's uncertain for them, and as such, their earnings may get worse and worse, and they go out of business. There are those. However, there are some that will benefit from it and will thrive and they have strong business models that will last, whether or not there's vaccine, no vaccine, pandemic or pandemic. They're making money. How much money? Maybe a little lower than what it was last year, but they're making money going forward. Again, we're looking beyond now, we're looking forward. So if the current situation is uncertain, the future is always uncertain, by the way. We don't know. It's just the degree of uncertainty. And for me, the more information that we get, we are able to make more informed decisions moving forward. And as such, I wouldn't necessarily a blanket statement to all stocks. Look at the stocks that you're picking, and pick the quality type of stocks. And this is the time now that you actually have to do a lot of work, a significant amount of work, because in terms of to pick the type of investments or the companies that you want to be a part of, because yes, it is uncertain, but not all companies are created equal, and some will do quite well. 2 years from now, we may be seeing a different tune.
Right, and I think that's a great nugget. So not because it's pandemic time, so me not buy nothing. It's about being wise, doing your research, speaking to the licensed folks, and making sound decisions that are in your best interest based on what you see is going to likely, perhaps, because we don't know for sure, will happen to companies in the future.
And to that point, Kerry, and remember, right? So if your expectation is 6 months or 2 months or 1 month, then of course don't buy if your expectation is that I'm going to be coming out in 1 month. Definitely, no. I would support the point if your expectation is I'm going to buy now and I want to sell it in a month. Yeah, that's definitely not a good idea.
No, not at all. Thank you for that. Picking up a couple of questions from earlier in the live from Carrie. Hey, Carrie. What is the major risk of preference shares? I know we had defined what a pref share was, pluses and minuses. But are there any major risks of holding a pref share?
All right. So a pref share, and again, the ones that are listed. So again, it's a type of stock, meaning the ability to get paid your dividend is a function of can the company pay, right? So I like to see it as a company is operating, it has to buy raw material, sell the goods, make some money, then it pays staff, pay the front end staff, the back office staff, then it pays the bank because it borrowed money from the bank, and then something is left. Right before it pays the taxman, pays the bank first, right? So pays the banks its interest, and then below that it then pays the government of Jamaica its taxes. What is left is what is to be distributed among all the people who provide capital. Now, pref share comes before the ordinary share or the common share guy in terms of dividend, money to be split up. So the profit that is made, as it is structured now, pref share come in terms of priority. Pref shares is paid out right after the bank. So money that you borrow from the bank as a loan has to be paid back, as in the interest on it and the principal has to be paid back. And then it's okay, I'm going to pay the pref share holder that guaranteed return. So the risk associated with a pref share is that one, if the company for whatever reason can't pay and it's making losses and it can't pay, technically speaking, the preference share, the issue of the pref share can say, okay, hey, we can't pay the pref share now. Can we get a little deferment? Can I pay you not this year but next year? So the fortunes of the company, profitability of the company is important. So you still have that risk. You also have the same level of pricing risk or liquidity risk. So if you buy the pref share and you're thinking that, okay, I'm going to it says it's gonna mature in 5 years, meaning you get back the principal in 5 years. If within that period you want to sell, then the price that you pay for that pref share may not be the same. It may be lower or higher. So you're taking that quote unquote price risk. So there's no guarantee on the price that you'll be able to sell the pref share at before maturity. If you wait until maturity, of course, you get back the price that you paid. But anywhere in between, the price is judged by you trying to sell it and somebody out there trying to buy it. Price at which you are able to get it sold at is the price at which somebody's out there willing to buy it at. So it is the returns or the cash flow or the benefit of the pref share is that you're higher in the pecking order than the ordinary shares, and the amount of money that you get, you kind of a pretty good idea that it will be 7.25% for argument's sake each year. And once the company is operating and can pay, you will get your return. The guy who buys the ordinary share, the company is supposed to declare a dividend, and so they're waiting. The ordinary share guy is waiting on the amount of dividends to be declared by the company. Now, the company will articulate, say, we have a policy of paying, 30% of all of the revenue that we make, but there's no guarantee that they have to stick to that. The company may say, okay, COVID time, we're going to defer payment. We're not paying any ordinary dividend this year. We're going to lock in for a little bit and see how things clear up, and then we decide.
Yeah. So that's the thing. I mean, at the end of the day, with like any shares you own in a company, the risk is once the company is making money, you're good. If they're not making enough money after they pay the taxman and the credit and the other creditors of debt, loans, and that sort of thing, as you said, pay back the bank, then that's a problem. If they can pay those and then they have enough to pay you, and in terms of pecking order, pref shareholders will get paid first above
before ordinary. So
before ordinary, right? Debt
first, and then pref share, and then ordinary share.
Right. Good stuff. Thank you so much. Great question, Carrie. Kefash or Kefash, forgive me if I'm mispronouncing these names, folks. Going back to the issue of suppose I want to start investing in stocks overseas in the US market from now. I mean, what tools do you recommend our platforms Jamaicans could use, I guess, from our local standpoint?
So
until JMMB is ready.
So theoretically speaking, right? I would hate to like recommend one that has not been well researched or anything. So I would say, Google is your friend there, and just do your homework in terms of go for the brand name ones to do it. So I wouldn't want to say call the name of a low cost broker without doing all the work on it. So we if we're buying for the portfolios that we manage, we use our Trinidad affiliate still. So and we have like your Morgan Stanley, we have relationship with those
larger brokers,
more expensive type brokers to deal with. But for a low cost, trust me, Google will help you.
You're right, Google, and then of course there are opportunities to see how they're rated by their clients. Right. As you said, name brand ones that are managed by well-respected financial institutions in the United States. They would definitely perhaps be some to consider. Thank you. Sean had a question because we're talking earlier about unit trust. So we spoke about the commission fee that you would pay your broker, JMMB 0.5% commission fee on the value of the trade. What are the fees on unit trust? Is there a management fee, or is just fees when you get cash? Yeah.
So the unit trust is a mutual fund, which is basically pooling everybody's money, and it's a company there's a TRN, it's filed taxes and everything. So the company pays a management fee. So there is no management fee to you. So you will never ever see your unit trust and you buy it for $10 and then there's a 2% charge associated with it. So there's no management fee that the entity called the unit trust has hired a manager to manage it and will pay the fees associated with the manager. In the same breath, this unit trust, that entity that you invest in, it also pays an auditor to come in and audit the books every year. It pays a custodian / trustee, and the entire purpose of that trustee is to ensure that the assets are not commingled with the manager's own. So every single asset for a unit trust, it's not in the name of JMMB anything. It's in the name of a third party. That is, their entire job is just to say, okay, I am watching these assets, can't do anything with it. We have to go through them in terms of doing anything. So the trust itself pays all of the fees and expenses. So what you actually see in the price of your unit trust is after everything has been deducted. After everybody has been paid, you're seeing the net value or the net profit, for argument's sake, from the operations of the unit trust. So it's already paid.
Okay, thank you so much. Great question. Just to go back real quick, Peter, because you mentioned earlier about indices on the Jamaican Stock Exchange, right, and even on the US Stock Exchange. So instead of buying one individual financial stocks, I can buy into the financial index, something like that, or the manufacturing and distribution index, I think. What are those exactly, and when should I be looking to buy into the indices, not indexes, like what happened to me last week, but the indices versus buying into one stocks? Because I know in the States they have that option as well on the New York Stock Exchange.
Right. So you pose, it's a fundamental question, right? So remember the purpose of the indices are index funds, right? Their job, it's not active management. So 10 stocks or 15 stocks, and we're going to buy all of them based on some weighting. And that will be the portfolio. The managers of the index fund, we're saying we are not in the business of trying to outperform anything. All we're in the business of making sure that you always have exposure to these 10 things. So the objective, so if you're buying into that, you're saying, okay, I'm comfortable just earning whatever the price changes in these stocks are. I don't want any skill to be applied to my portfolio. Just set it and forget it. So if you're comfortable with getting the return, what I call a passive return, a set it and forget it type of return on your portfolio, then fine. In the States, right? And just to give you context, right? So I'm going to say our financial index is made up of, don't quote me, but it's no more than probably 18 stocks, right? But if you do an analysis, that's okay. What is the weighting? What makes up? What is the lion's share of these indices or index? For the financial index, you'll recognize that the financial index is made up around easily 60–70% of it is probably made up of around 5 or 6 stocks, right? So I can get the performance of the index by buying 5 or 6 stocks. Now, indices or these index funds, they have the benefit of, if I have a little bit of money and I can't buy the 6 stocks, it makes sense I just put the money in there and just set it and forget it. That's one option. The other option is that you have a unit trust. Now, the objective of the unit trust is that the unit trust need to outperform. They're trying to use some skill to get return. The index fund is saying, we don't believe that you have any skill or there's any way to earn any significant return over the long term by buying and selling. Just take a simple passive approach and you'll be fine. Now, in the States, in the States where you don't have 40 stocks listed, there are thousands of stocks. So that is mind-boggling to even try. How do we sift through it? How do we find value? How do we do it? So those markets, it's probably harder to kind of generate any significant return over the long term because there's so much things to do. You can't cover everything. So my personal view is index funds play a part in the sense that it's a low-cost way of getting a passive approach towards some investment. But within a market, however, that is small, and also there exists unit trust mutual funds, it decreases the attractiveness of it. It doesn't totally eliminate it. It's just that if given a choice, I would opt for the mutual fund slash unit trust rather than buying the index itself. Now, saying that, even after saying all of that, there is, and again, if you look at the index, these indices, the price at which they're trading at, how can I do it? It's simple. The price at which they're trading at is lower than the price of it if you try to buy every single stock. So the value of all of the stocks in the portfolio, in the index, is higher than the price at which it is selling at. We call that in industry, it's trading below its net asset value. And every day the stock exchange, on the stock exchange, you can see all of them announce, okay, our NAV is X. When you look at the X and it say it's probably 90 cents, when you look at what it's trading at, it's at 60 cents. Again, the reason for that is the person who is looking to buy want to pay 60 cents, and if you want to sell it to them, they're not moving from 60 cents. So the fundamental value of it, it's 90 cents. If you buy all of the shares of that index and sell all of them, they're saying as at that time, theoretically speaking, you should be able to sell it for a higher price. Now, the essence of it and how much of it you buy in your portfolio, that's a more nuance and something that you should talk to your advisor. But I'm going to declare my bias that I like mutual funds and unit trust rather than index in our local market.
Okay. Thank you so much, Peter. I mean, we are just about out of time. I just want to revisit a question here from Brilliant. Hey, Brilliant. So we spoke earlier about unit trust options, and depending on who provides a unit trust, JMMB has several unit trust funds. Other financial institutions do as well. It really is very accessible for individuals with not a lot of cash to start investing in. So it varies. How much you need to start one varies. So it's literally a few $1,000s, 10,000 give or take, higher or lower. Brilliant was also confirming if they could use the money in their EMA to buy unit trust. I'm not personally sure. Do you know, Peter?
Yeah. So you can't go on and just similar to how you buy a stock. You can do it like that. However, once you have a unit trust account, you can transfer money between. So,
okay.
so with the unit, if the money in your EMA is cash, you can easily, once you come in and set up a unit trust account, you can transfer money every online to buy units in the unit trust.
Awesome. Great clarification. Thank you for that. So, Peter, I mean, I see a lot of people still jumping on, guys. Yeah, you're late, but not great. We're wrapping up. But guess what? We recorded this entire session. I see people, asking questions that we actually would have covered earlier. Somebody who was it trying to find her. Yes, Lynette saying she had bought some stocks in an IPO and the prices were watching, but we actually covered that as well. So please, guys, go back and go to our YouTube channel and rewatch this episode if you'd like to kind of go over anything or catch anything you would have missed. Share it with a friend. We did our stocks episode last week to kick this off, so feel free to check that out as well. Share it with a friend. And of course, if you have any questions about how you can get started or anything about your own particular account with JMMB, you can DM us and we'll have somebody contact you within the next business day, because I said it's after bedtime. Well, not our bedtime, but curfew. Everybody going home. So so please touch base with us in the DMs with your private questions about your particular account. But this has just been an awesome discussion. Peter said I'm beginning up already, so I want to invite all of our fabulous viewers in the chat. Please give Peter a virtual round of applause. Thank you so much, Peter. I mean, let I tell you, Peter, we would hold him, as I said earlier in the discussion, we would hold him down in the marketing department and can't go nowhere, because we want him to tell us and educate us and pour into us all of the wonderful investments knowledge that he has It's really been another awesome session. Peter, thank you so much. We learned so much in this session. I think we could have probably have a part 3 and a part 4. You never know. Guys, we will be back next week. Not necessarily with Peter, but follow us on social media. As I said, if you subscribe to JMMB Group Jamaica's YouTube channel, you subscribe and you hit the notification button, you'll get notified every time we're going to go live or we are live, so you don't miss a session. And again, for what you're not able to catch, it's recorded so you can watch and share and really soak it all in. Please give us your feedback. Let us know what kind of topics you want us to cover in the future, because we're going to be here every week for a while as we cover the topics, because we're in curfew, guys. There are nowhere to go. So, and we still have more goals we want to achieve for 2021. We are still working at achieving our goals in spite of what is going on. We're not stopping, and JMMB, of course, will continue to be here to partner with you, to give you the information and the tools that you need to be able to stay on track. And we are just so grateful. So Peter, on behalf of the rest of the JMMB marketing team, thank you very much, sir. Now your daughter, you can unlock the door and let back in your daughter. Kidding. You can tuck her into bed. I want to big up my marketing team who always works very hard. Jessica, our admin in the back, who is answering the comments and putting up the stuff on the screen and navigating the cameras. Jess, thank you so very much as always for your support. And really just grateful for the rest of the team, Stephanie and everybody who just does this with me week after week. So love it, love it, love it. Yes, we're seeing the feedback, we're seeing the lists, we're seeing the suggestions. Thank you, guys. And we just continue to everybody to please stay safe. That's all we can say. Just please observe the protocols. Even if you think you can survive COVID, a loved one or a colleague or a friend may not. So please continue to observe the protocols. Wash your hands, wear your mask, keep your distance. Vaccine is not a cure, but we are grateful for it in this season, and we just need to continue to love and support each other in this season and beyond. All right. Yes, Odian, don't send me an invoice. Big up yourself. Don't send me an invoice. Can't afford it. Thank you. All right, guys. Take care, Peter. Night, night. All the best.
All right, and stay safe, everybody.
Okay. Bye-bye.